down 97% off its highs. Is Nano Dimension Limited stock a buy right now? That's the question I'm going to answer in this video by looking at its revenue, its cash flow, its profit, and its valuation, as well as showing you an interesting stat in its financial statements. So let's get right into it. Starting with revenue, Nano Dimension's revenue exploded in late 2021, starting 2022, as its 3D printing technology is taking off and finally delivering robust, explosive revenue growth, as you could see in the trailing 12-month figure here. That said, Nano Dimension's operating income just keeps moving in the wrong direction despite the explosive revenue growth. It's been losing money on the bottom line, on operating income, I should say, because that's different than the bottom line, which is net income. And it's fallen from around 5 million around 2019, 2020 down to 31 million in its latest quarter. The same can be said about its cash flow from operations, falling from a little less than 8 million all the way to 27.95 million. And then you might say to me, wait a minute, wasn't Nano Dimension profitable on the bottom line in the most recent quarter? And I will say yes. That's the interesting thing that I wanted to show you. And this is something I've been discussing with many innovative tech stocks in 2023. And let me get into it here before I speak on any more detail. So Nano Dimension has a little over 1 billion, let's say close to they have $985 million in cash and bank deposits. Now, what's been happening with interest rates over the last year? They've been soaring, right? So this money that Nano Dimension has had for a long time, right? They had this last year too. You look at March 31, 2022, they had over 1.2 billion in cash. But the difference between last year and this year is that interest rates are significantly higher. So now Nano Dimensions can earn a greater degree of interest income on this cash balance, which can help boost its profitability, which is precisely what they did. Let me show you the income statement now. And I have highlighted here their finance income. It's another word for interest income. Look at it explode from 2.86 million in the quarter ended March 31, 2022, up to 56.8 million in the quarter ended March 31, 2023. So then when you look at its net income, the income on the bottom line, it turned from a loss of 33.7 million to a gain of 22 million. This line down here, to a gain of 22 million. And that was primarily a result of the interest income, because if you look at just the operating loss, it stayed relatively flat. It improved slightly from 32.9 million loss to 31.2 million loss year over year. So a slight improvement. Certainly not the improvement that you see when you look at the bottom line. When you look at the bottom line, you say to yourself, oh man, this company has turned the corner on profitability. Things are improving. It's headed in the right direction. And that might be the case, right? Revenue did explode and they have taken a few steps forward, but not to the degree that's shown on the bottom line profitability, right? It makes it look better than it actually was when you consider that the primary difference was that interest rates exploded and the company was able to earn higher interest on its cash balance, which is short-term in nature. I would prefer the company make more money through its operations, not from changes in interest rates, because it's not a bank. That's not what it's in business to do. I want it to do good on the thing it's in business to do. So I thought I'd highlight that, okay? Finally, I wanted to look at the valuation, and it's still not cheap. Despite the stock price falling 97% off its highs, when you look at the price to sales ratio, it's still not cheap, trading at a price to sales of 17.2. I mean, it's down significantly off its highs of trading at a price to sales of 300, but I would argue it should have never gotten that high to begin with. So at a price of 17.2 price to sales, with little progress shown in terms of operating income, cash flow, I'm going to have to say no, this stock is not a buy, even though it's down 97% off its high. Now, I did this video as a request from one of my subscribers, so thank you for requesting. If you've got some company you would like me to do a video on, please feel free to request it in the comments down below, and I make a list and I keep a list and I try to get to them in order, or among, when I'm doing my research and due diligence, I get to it whenever I can. So I appreciate all the requests. Please keep them coming. But that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.